Hello, very warm welcome. You're watching ET Now, your trades. This is Priyanka Kapil along with me, Snehi Shah. Markets clearly saw a downward spiral which continued in markets today. Bulls were clearly at the back foot, majorly on the back of the macro concerns like geopolitical worries, rising dollar index, surging bond yield. This all weighted on the markets clearly, and we saw Nifty trading below 50 DMA of 22,200 marks. And in fact, the top losers were institutional favorite sectors like IT, banking, mid-cap also gave up the gains. But then small cap, that closed in green. Standout gainers were clearly the battery stocks, Exide, Amara Raja Batteries. In fact, a couple of names from the small cap space. Defensive buying was seen in some of the subsectors like fertilizer, FMCG. Maybe it's on the way reasons because there's a strong monsoon forecast, which is a tailwind for them. Many other value chain stocks like even capital goods, energy theme stocks, value chain stocks, they surged today. But then the sector which did not do that bad, or in fact that ended in green, was small cap stocks clearly. On the specific movements from a lot of battery gainers, nearly 100 rupees move what we have seen on Exide from the day the news came in. But then multiple upgrades also have come in and stock has further rallied 8%. AG's logistics also rise on the that also surged today because of the strong cargo update. That's what what looks to be the market check. Then specific news, if you talk about a couple of brokerage notes which actually lifted the sentiment for many stocks. Amongst them was one of the newly listed arm of Bharti Airtel, Bharti Hexacom, which gained more than 10% today on the Jefferies note. So second consecutive day when we've seen intensified selling from FIs also, and of course the geopolitical concerns which are weighing on the market.
Absolutely. So very well summed up, Priyanka. That's largely all the moves that we were spotting on the market today. But other than all of these, we did have a lot more news makers. And the next stock that was on our radar today was Jio Financial Services, because that company has gone ahead and inked a 50-50 joint venture with Blackrock for wealth management. This is Blackrock Singapore Pte, which is an arm of Blackrock. And this is for the creation of a wealth management arm with the future possibility of another subsidiary as well. So on the back of that, Jio Financial, that stock did pretty well, up 2% in today's trading session. And on the other hand, when we move on, there was yet another exclusive that we were getting today. And our sources tell us that key global funds are eyeing Vodafone Idea's 18,000 crore FPO. And you have names like Fidelity, Rajiv Jain's GQG, SBI Mutual Fund, Aditya Birla Sun Life Mutual Fund, as well as HDFC Mutual Fund that could be seen amongst the possible investors in this FPO as well. So, that's also positive news coming in for Vodafone Idea. On the flip side, though, the stock did not do very well today, down 1.5% in today's trading session. And lastly, let's also talk about what Kumar Mangalam Birla had to say on the launch of their D2C platform, which is ABCD, which is Aditya Birla Capital Digital. That is their D2C platform. He said that they plan to acquire 30 million customers in the next 3 years on the basis of this D2C platform. So, that's all the big things that happened in the market today, and that's the market summation for you today as well. But before we head into a holiday tomorrow, let's understand the kind of moves that we can expect going into Thursday. And for that, I'm being joined in the studio by our in-house technical expert, Kunal Bothra. Kunal, hi, thanks for taking the time out and joining us in the studio today. Help us understand what kind of moves can we expect to see on the market on Thursday. Do you think all this geopolitical pressure will be digested by then? Now that we have a breather tomorrow, what kind of moves can we expect overall?
Good afternoon. So, the two divergent parts of the markets are, one is that the US markets are now, or especially the Dow Jones, is getting into a bit of an oversold territory. So, it's already shed almost 2,000, 2,500 points in the last 2.5 odd weeks. So, I think that aspect I would probably expect the US indices to go into a bounce. If that happens, of course, it could probably result into a stronger bounce effect across the globe, and especially to our markets as well. And the second, the most important aspect is that we've, in the last 3 or 4 days, we've seen two down gaps on the index, both on the Nifty and Bank Nifty. And generally, we've seen the down gaps on a shorter term time scale, they generally don't get sustained. And there's an eventual filling of the gaps which happens, or at least a partial filling of the gaps, which tends to happen for the indices. So I think in that aspect, we could expect the index to go into a bounce, and expecting that the bounce could probably take the Nifty back towards 22,500 odd levels.
All right. In that case, that scenario, Kunal, what would be the stocks that you would recommend at this stage?
So I'll go with two buy calls and two differentiated names. In fact, stocks which are now resurrecting or coming back into breakout modes. The first one is one Blue Dart. That's a chart which is now coming back into a very strong bullish flag formation as the first formation after almost months of price correction for itself. So that's with a target of 6,500. Stop loss could be kept at 5,900. And the other is about Usha Martin. That's a stock which is forming a classical rectangular pattern breakout about 340-45 mark. So expecting a strong 10% up move in the near term for the stock. 370 as a target. Stop loss at 333.
Kunal, well, thanks so much for joining us and helping our viewers with your market view as well as your picks. With that, we'll let you go. But let's keep it with the technicals then. And now we're being joined in the studio by my colleague Shrishti Sharma, who's here to take us through what has made it to her technical charts today. Shrishti, tell us what you're spotting.
So two counters on the breakout side is what we have spotted. First is Laurus Lab on the charts. If you will see, the stock was up by 3 to 4% in today's trading session, and a bullish engulfing technical pattern is what we have spotted in this particular counter. You will see that the Laurus Lab did give a breakout around similar levels and once again came to retest that, and now resuming its uptrend, is now trading above its 20-day moving average, taking support at those levels, and today move was also supported by a long build up on the derivative side. So this is the first counter on the breakout side. Moving on, a very interesting chart by LIC Housing Finance, because in this you will see an inverted head and shoulder pattern, and that's clearly visible on LIC Housing Finance. The stock is actually retesting its earlier resistance level, and in today's trading session you will see a strong green candle in this particular counter moving above its resistance of 650 odd levels, taking support at its 20-day moving average and also supported by a long build up on the derivative side. So these are the two stocks on the breakout side. Back to you.
Right, thanks very much, Shrishti, for spotting us two of the breakout stocks. And of course, we saw a few of the housing finance stocks were up in the trade today. Thanks very much. But then let's step back and let's understand what do fundamentals are suggesting at this point in time, which sectors look favorable for experts. So time now for some interesting opinion on the markets. Here out views from DSP Mutual Funds Vineet Samre. He believes that the near-term outlook on Indian equities looks challenging. Let's listen to it.
The long-term outlook for us remains positive, and generally as fund managers we tend to remain biased towards equity. So I think that is what drives our long-term view. But I think the near term clearly is looking a bit more challenging, and let me just lay out few of our thought process how we are thinking about the near term. So I think clearly we have come out with a very strong growth phase over the last 2 years or 3 years in terms of the earnings momentum, and we saw that this earnings were really driven by, in the first phase was top line driven post the pandemic, and then in the second phase the margins expansion actually story worked in favor of driving the earnings. But what we are seeing now is the top line seems to be moderating across the board, across most categories, except let's say the industrials, engineering, some of those tend to do well. But excluding that, we are seeing that the top line is moderating, and now most of the earnings benefit which came because of the commodity pulling off, those I think are also going to get challenged over the next 1 or 2 quarters.
Well, all right, that's the word coming in from Vineet Samre. But viewers, with that, we'll slip into a very short break on this edition of Your Trades. We'll be right back with more news and updates on how the market shaped up today. So stay tuned.
Welcome back. You're watching Your Trades on ET Now, and now clearly about the stocks that stand out today. The big story of the day happens to be the battery stocks. Battery makers have been powered up in trade after Excite's announcement of its partnership with Hyundai and Kia for EV batteries. Srishti is here with all comparative details on Excite over Amara Raja. Let's listen to it.
Well, yes, Excite as well as Amara Raja, they both seem to be really excited in trading session today, and that's especially after when Excite announced that they are coming out with an alliance with Hyundai as well as Kia. They have joined a pact for EV batteries in India, and that's indeed a very big positive for the company coming in. And after this announcement, we have seen a lot of brokerages going ahead and raising the target price for Excite specifically. So firstly, let's take you through what these brokerages are saying for today. Nomura has come out with with the note, hiked the target price to 485 rupees versus 233 earlier, maintaining a buy. Just yesterday, Morgan Stanley raised their target to 485 levels. Investec has also raised their target price, and even JP Morgan. What Morgan Stanley is highlighting is that the pact with Hyundai and Kia actually validates the capabilities, and it is likely to be a multi-year contract, and the government support in Made in India EVs is a strong for such tie-ups in the times ahead as well. So they are positive that going ahead, both of these companies can actually garner more of interest from all these OEMs. Wherein on Nomura's part, they believe that there is a possibility of import duties being imposed on the cells in the next few years, and they have also raised their multiple to the lithium-ion cell capacity at 3 times of book to value, in line with the global peers. And we are aware that Exide did announce their pact with Hyundai and Kia, and this is giving confidence for Amara Raja as well, because do remember that India's EV penetration, especially in the four-wheeler segment, is nearly about 2 to 3%, and in the times ahead is expected to improve. And both of these companies have come out with their capex plans for this particular facility. For Exide, they have said that 4,500 crores in the phase 1 is what they will be investing, and the first order from 2 of the major OEMs is already what we have got. And for Amara Raja, 1,500 crores is the initial capex, but going ahead, they want to raise it to 9,500 crores as well, with a 16 gigawatt hours of capacity. So both of these companies are really geared up, and that's why we are seeing the re-rating, because with the first order, it's the opening of the doors that has happened in the EV battery space for Indian companies, and Exide has definitely gone ahead and got that thumbs up from global OEMs. And similar is the market expecting that maybe in the times ahead, Amara Raja could also come out with one such announcement. But in the race, who is coming first, then Exide is definitely leading the race for right now.
Well, all right, Shrishti, thanks for taking us through that. Both of these stocks up 11 and 12% in today's trading session. So what a good day this entire battery pack has had. But moving on, let's talk about another stock that was in focus today. It did pretty well yesterday as well, and today also the stock was up almost 4%, and that is Senco Gold. On the back of its Q4 update, of course, we managed to chat with the management, MD and CEO Suvankar Sen at Senco Gold, and he spoke about the company's growth outlook going forward. He also touched upon their expansion plans. So listen into what he had to say.
We will continue to grow on Eastern India and Northern India. That is where we want to penetrate, and through the franchisee model, it just allows us to penetrate into the tier 3, 4, 5 towns and even semi-rural markets. And today, if growth has to happen, you need to take people along with. But in the long run, your making charges is where you will get your margins from. And diamond jewelry, with the increase in diamond jewelry, the margins you get from there is a little higher compared to gold jewelry. So I think that over the long period of time, if you ask us, though I would say that our PAT in the historical past has been in the range of 3.2 to 3.5%, and I think that I should give you that idea and the guidance that the PAT will remain in the same kind of range as it has been in the past.
All right, so Mr. Suvankar on the Q4 updates from Senco Gold. In fact, some of the other names also from the jewelry space was buzzing today, but that was on a different news. Well, let's just focus to VST Industry, once a stock which was a buzz today during the trading hours, and the reason is because Radhakrishna Damani bought stake in a bulk deal in VST Industries. Vinny joins in to decode Radhakrishna Damani's current shareholding and also over the years and what is his current stakes looks like now.
So absolutely what we're seeing is, since if you look at Jan 2024 to April 2024, that's just yesterday, we saw overall 2 bulk deals that have happened. First time was at the beginning of the month of Jan in 2024, where Radhakrishnan Damani actually bought around 1.4% stake in VST Industries. And now yesterday we saw in a bulk deal that he's furthermore bought 1.5% stake, around 2.34 lakh shares in VST Industries. Yesterday's seller was HDFC Mutual Fund. They have been reducing their stake in the last couple of quarters. Now overall yesterday they sold around, when you look at it for HDFC Mutual Fund, they sold around a 2.1% stake, and as of December they held around 5.84% stake. Now Radhakrishnan Damani, when you look at it, plus his companies, that is Derive Trading as well as Brightstar, all of them all together now hold as much as 33.65% stake. So this is adding the Jan stake as well as yesterday's stake, and now they hold the largest, they're the largest stakeholder in the company, because the promoters as of December, what we have in terms of shareholding, they held around 32.16% stake. So yes, that's something interesting to watch out for, because Radhakishan Damani has got interest in VST Industries for quite some time. It was as early as 2001 when he bought the first time when he entered into VST Industries, and since then he has been holding shares in VST Industries either through his companies or individual name as well. And yesterday what the bulk deal we saw was in individual capacity, that he bought this stake of 1.4%. Interest is because, why is it increasing? Because government taxability and the change around tax policies is not much in the last couple of years. They've been consistent for cigarette players. Legal shift towards legal players is increasing. The taxation is stable, so that's why they've been gaining market share. And the management is making a lot of efforts in terms of improving the cigarette volume growth, which should start coming in the books, and meaningful improvement we'll start seeing from FY25. So it's something interesting working out in VST Industries. And let's not forget, now VST Industries has actually managed to outperform in terms of a stock move versus ITC in the last 1 year.
Well, all right, Vinny, thanks for pointing out that last bit to us. Very interesting move coming over there from VST Industries compared to ITC. But let's get to move on, talk about yet another stock that was in focus today, and that is Vodafone Idea. Now, we learned from market sources that potential institutional investors for Vodafone Idea's 18,000 crore FPO include Rajiv Jain on GQG Partners and some key global and local asset managers as well. My colleague Anurag Joshi is joining in with all of those details. Anurag, take it away.
So Vodafone Idea's 18,000 crore rupee follow-on public offering, which is the biggest such equity sale in the country, opens for anchor investors today, and a slew of investors are lining up to invest in the offering. And our sources have told ET Now that some of these investors include Fidelity, GQG Partners, which is run by Rajiv Jain, Aditya Birla Sun Life Mutual Fund, HDFC Mutual Fund, and these are seen as possible investors in the issue. And ET Now had reported earlier that Vodafone Idea had already secured the commitments from the institutional investors for the upcoming sale, and this issue is open for the public from April 18 to 22. Now, yesterday the management had told the media that about 5,700 crore rupees of the issue will be used for the 5G rollout, and following the issue there will be some change in the shareholdings of the key shareholders, which is the government, the Aditya Birla promoters, they have equity, and the Vodafone PLC. The government's holding is going to come down from about 33% in the company to about 24%. Aditya Birla promoters who are holding about 18%, their shareholding will come down a tad, but they will continue to hold above the key level of 15%, and Vodafone PLC's holding also reduce because of this.
All right, Anurag, quite interesting names, big names rather, for the anchor investor. Let's see how stock reacts when it's open for public on 18th April. Now, moving further, shifting focus to our group stocks, which has been in news for quite some time, talking about Aditya Birla Group. And speaking at the launch of Aditya Birla Capital Digital FinTech app, Kumar Mangalam Birla mentions that he's planning to launch jewelry business shortly, and the initial investment could be around 5,000 crore. Let's listen to him exactly what did he say.
As we advance into 2024, the launch of two new consumer-facing ventures marks the group's commitment to constructing a growth platform characterized by a unique confluence of strength and breadth. Just last month, we launched our paints business with an initial investment of rupees 10,000 crores, as you know, and in a few months, we will be launching a jewelry retail venture with an initial investment of rupees 5,000 crores.
Well, all right, all of these were some stocks that made the buzz in today's trading session, but well, there were a whole host of other stocks as well that were quite in focus today, and my colleague Gaurav is joining in to share a list of just that. Gaurav, hi, take it away.
Well, first let's start with Bharti Hexacom, because this company has given almost 10% returns in the day's trade itself. Now, this is on the back of the Jefferies note, where they have initiated with buy rating and a target price of 1,080 rupees for the stock. What they believe is that this is actually a best play when it comes to Indian telecom sector, and on back of this, they are expecting revenue and EBITDA to grow somewhere in the range of 16 to 21% in the next 3 years. And this is because of this bullish view. We also saw some positive sentiment coming up in the stock price. Next, let's talk about Sterlite Tech, because the company has successfully raised over 1,000 crore rupees via QIP, and this will be utilized towards strengthening the balance sheet of the company. Now, why this QIP was important is that we saw some marquee investors investing in the QIP, like HDFC Mutual Fund, Nippon Life, Goldman Sachs, and on back of this, we saw the stock also reacted positively. The third one we have is PNC Infra, because company got a settlement agreement from NHAI, and they have received one-time settlement of worth 117 crore rupees. And on back of this news, we saw a positive sentiment hitting up this stock also. The fourth we have is Steel Strips Wheels, because the company recently signed alloy wheel supply agreement with the leading passenger vehicle OEM company. And if we look at the total the alloy wheel segment, over 28% of the revenue comes up from this segment for the company, and the company is also going to expand its capacity by 60% in a timely manner. And on back of this news, we saw a positive sentiment hitting up this stock also. And lastly, let's talk about Crisil India, because Q1 CY24 numbers are out now, and if you look at revenue, it was up 3%, but net profit was down 5% on a YOY basis. EBITDA was down almost 5%, and EBITDA margin were also at 26% versus what it was at 28%. And on back of this news, we saw negative sentiment hitting up this stock also. So all in all, on back of this news, we will definitely keep an eye on these counters and see how they perform in the days coming ahead.
All right, Gaurav, thanks very much. We will certainly keep an eye on all these stocks which you mentioned here. But another one very important segment which Street is really excited about is Infosys numbers now. Post TCS posting stellar numbers. What to expect from Infosys? Anisha has all the details. Anisha, over to you.
I think it is a bit concerning, because when that merger had happened, there was that entire overhang of what happens to attrition, what happens to senior leadership. Immediately, we did not see a big impact. So the Street thought perhaps the worst is behind. But now we are seeing over the course of last 6 to 8 months, there have been important exits that have happened from various verticals, whether it's the sudden exit of the CFO or the fact that the CHRO had kind of quit. You also had resignations coming in from CMO as well as vertical heads of the businesses, key businesses like Americas, BFSI, etc. And that's made the Street a bit nervous as to what is happening within the company. Remember, there were these rumors in between as well that there might be the leadership change at the CEO level as well. And perhaps that's the reason the large part of investors are sitting on the sidelines to make sure that this entire flux of leadership change is behind, and only then they will come into the counter. We have seen the kind of re-rating Tech Mahindra, etc. had with leadership change, but for now the Street is sitting on sidelines. To add to that, the performance also hasn't been that great, right? FY24 seems to be a bit of a washout. They had already cut down their guidance, and now Street is saying that just to get their house in order, they might be putting their bandwidth to those issues, and that's why for FY25 as well, growth might be lagging for the company. Axis Capital has come out with a note with a reduced rating. Target price is just around that 5,000 rupee mark. Let's see whether these leadership and attrition issues is something that management can stem, or they will continue. All right, Anisha, well, thanks so much for taking us through that. Come Friday, we'll all be watching out closely for Infosys as well as Wipro's numbers also to come out, along with 2 other nifty names. Priyanka, tomorrow is a holiday, so viewers, enjoy the day off tomorrow.
I think, Snehi, you were also very excited. You have some plans for a truncated week.
Well, no plans. I'm hoping to get a lot of rest tomorrow, especially after the market moves we've seen over the course of this week. Just the 2 days that have gone by, it already seems like a week. But viewers, we'll see you again day after tomorrow.
Yes, but then an important cue which has to be watched is Fed comments today. Generally, Powell has to make some comments, and we'll look out for it. So let's see how do global cues pan out once we return back on Thursday, since macro factors are what is weighing on Indian markets clearly. Thanks very much for watching.
If you like this video, then like, share and subscribe to ET Now.